That's the latest coming in. Let's discuss that further with Sabyasachi Majumdar from Credit Ratings as well as Nikhil Nigania, the director at Bernstein, joining us on the show right now. Hi, gentlemen. Thanks so much for making time and speaking with us. Sabyasachi, wanted to begin by asking you this national electricity plan, is this really a fresh announcement coming in? Or this is something that was budgeted for and talked about already, and you guys were factoring it in the capex which is lined up for the coming years?
Yeah, so if you look at it, obviously, the power demand has been fairly buoyant after the recovery from the COVID. And, it has been going at a high single digit. So basically, it can be considered a continuation of the current trend. Right now, if you see, peak demand is somewhere around 250 gigawatt, and the government expects it to go up to about 458 gigawatt up to 2032, which basically represents, CAGR of about 7 to 8% per annum, which is more or less in line with, what we have been seeing in the past. So it's pretty much based on that, but obviously the electricity plan, including the transmission capacities which have to go into it, have to be updated from time to time. So broadly, it is consistent with the demand growth that we are seeing. And that will require, as per the government estimate, that the total, GVA transformation capacity will go up from about 1250 to 2340. And the total inter-regional transfer will go up from 119 gigawatt to 168 gigawatt. And that would require a capex of around 9 lakh crore rupees, which is fairly consistent with the kind of demand growth which is likely to take place.
Nikhil, morning. Let's get in your take as well. What is your view as to what this national electricity plan could mean for the sector as a whole?
Sure. Yeah, so on the plan, so 9 lakh crore is a massive capex number. And to me, the surprising part was the 458 gigawatt demand estimation, which has now been put in. So earlier numbers, if I recall, were more in the 350 to 375 peak demand range. This to us seems like a big number. And in terms of beneficiaries of this expected rise in demand and the capex in the sector, it's a whole value chain, especially the transmission guys. So in our coverage, Power Grid is a big beneficiary of this. They will be the ones setting up the assets. And down the value chain on transmission side, the equipment suppliers as well, right? From the Siemens, CG Power, Hitachi, all of them, especially the high voltage guys, they are the ones who are going to benefit from this massive capex number which the government has announced.
Right. Sabyasachi, wondering which sectors do you think would stand to benefit the most, because there is that whole demand supply eco chain and a very large one at that.
Yeah. So basically, obviously, one of the beneficiary would be the transmission companies themselves. It means that there's a lot of, projects for them to take up. But apart from that, the beneficiaries will be the suppliers to the transmission network, which will basically, be the equipment manufacturers, the people who make the lines, conductors, cables, transformation equipment, switch yards, switch gears, all of those, plus the EPC contractors who are going to string up all these lines and set up all these capacities. So it will be broad-based impact across the large segment of the electrical engineering industry.
Broad-based impact, the entire ecosystem and the supply chain will get to benefit. You've talked about the sectors which will be in focus, but Nikhil, if I had to narrow it down to a few stocks perhaps that you think are best placed to ride this up move, which are those? Of course, Power Grid is the first one, but other than that, in terms of the equipment makers, do you have any suggestions?
Equipment makers, Anish, unfortunately, we don't cover. But so only caveat I'll put in there, a lot of the equipment stocks are up significantly over the last year or two in anticipation of a massive capex in this space, because this is not just an India event. Globally, also, power demand is accelerating and transmission is one of the biggest themes globally. So the valuations outside in look rich, but we don't cover them, so can't recommend names on the equipment side. But there are a bunch of them. In the high voltage, as I said earlier, you have Siemens, CG Power, Hitachi, GE T&D, Trill, who do high voltage transformers. The medium voltage side, you have players like Voltamp, and on the conductor cable side, you have players like Apar Industries and KEI. All of them stand to benefit from this.
Okay, Sabyasachi, let's get in your take in terms of whether or not you see the bulk go by transmission only, or do you believe even hydrogen, storage, etc., all of that as well
will get a push?
Yeah, obviously, see the transmission, this transmission demand that is being projected, that really depends upon what is going to be the underlying power generation itself. So there is an organic demand which is coming from this high single digit growth that we are seeing from the power sector, which of course in turn will depend upon what is the overall economic GDP. I mean overall GDP growth. So overall GDP growth will be growing the basic demand from the power sector. But apart from that, the two discontinuous impacts on the power consumption will be coming from the green hydrogen segment as well as the electric vehicle segment. So basically, to the extent that green hydrogen picks up, the government has a certain target in mind for green hydrogen, as a part of the total hydrogen. Plus, there's a lot of hydrogen demand, green hydrogen demand, which is likely to come from the developed countries like US, Europe, Japan, Korea, etc. Of course, right now, let's be a bit aware of the fact that while large volumes are being talked about green hydrogen, but at the same time, as of now, there are not that many large contracts which have been signed. So it really it depends from the green hydrogen perspective. It will really depend upon how much actual long-term demand contracts are signed with the various RE players who are looking to figure, put up large green hydrogen volumes. That of course, because the amount of electricity which will go into green hydrogen is immense. For every 1 kg of green hydrogen, is required 50 units of power. So if you're looking at millions of tons of green hydrogen, if assuming that demand materializes, you can just consider how much additional renewable energy capacities will have to be set up, and considering the fact that renewable energy capacities are of reasonably modest PLF. So green hydrogen and electric vehicles will produce the additional incremental demand, while the regular demand growth will come from the conventional power segment.
Okay, so what you're saying is that it's feasible because this is, Sabyasachi, a big opportunity. You think we will be able to, sort of incur that that capacity addition? It's not going to be a challenge?
No, capacity addition will be. I mean, I'm not saying that capacity addition is not going to be a challenge, but it's something that we can meet. I mean, 9 lakh crores. I mean, if you're looking at a 9 lakh crores of investment, that will require about 7 lakh crores of debt and about 2 lakh crores of equity. And given the kind of funds which are available, our own domestic savings rate, obviously it's not that the funding is going to be a challenge, because apart from that 9 lakh crores of funding which will go into the transmission, the money will also have to be made available for the generation itself. For instance, we are looking at, let's say, about 19 lakh crores. Here is looking at about 19 lakh crores
Sure.
investment over the next 7-8 years for renewable energy and storage alone. Plus,
Right.
if you add about 80,000 megawatts, which is planned for thermal, that is another about 8 lakh crores. So altogether, put together, if you're looking at all these numbers, we are looking at numbers anywhere between 35 to 45 lakh crores. But having
Right.
said that, given the kind of equity which is available domestically, as well as
Sure.
if the power sector is run fundamentally in an economic manner, international funds would also be available. So it will be challenging but doable.
Right. Point taken. So challenging but doable given the funding opportunities which are there. Nikhil, wanted to get you into the conversation and understand. Do you think bulk of this is going to happen only at the center level, or the state transmission companies will also be involved in this? And secondly, wanted your view regarding the overall power demand, because last 20 to 30 days, the power demand has slipped quite drastically. Is that transient, or or is that a sign for something which is impending for us?
Sure. So on the second point first on power demand, because that's fundamental to everything in the sector. See, we wouldn't read it too much into monthly power demand variations. So if you look at August month, power demand was down 5% year on year, but it's also a function of monsoon. So monsoons were quite good this year. And hence, usually when it rains a lot, you see lower power demand. It's as simple as that. So we won't read too much into that. Fundamentally, we believe power demand should grow at 1x of real GDP in India for the medium to long term. So which is something which the government also seems to be estimating, and something slightly higher than that. So we won't worry about near-term blips in power demand. We think it's a good long-term story, and especially with new use cases, as Sabyasachi also highlighted, in terms of hydrogen, in terms of EVs, they should only aid power demand going forward. Secondly, in terms of the role of center versus state versus private, it varies from sector to sector. So in a space like transmission, typically you'd expect all this 9 lakh crore, 30 to 40% would be on the state transmission side, and 50 to 60%, 60% or so would be on the central transmission side. Where apart from power grid, you'll also have private players like Adani Energy Solutions and Sterlite Power, who are quite active in that space. So that's how I would split on the transmission side. And on the generation side, there are a bunch of private players active. So apart from NTPC on the central government side, on the private side, there are multiple players, especially in renewables, right from Tata, JSW, Renew, Adani. So it's a very active space out there from private side.
Okay, point taken. So those are some of the stocks and the split between state and center. But Nikhil, I'm curious to get your take on IEX, because that one has become a classic bull versus bear kind of debate in the market, because we don't know which way that coupling is going to go. What's your base case assumption?
Yeah, so IEX, see, it's a good company. We've always liked the company, but there's always a regulatory overhang on it. So let's look at, see, for IEX, three things matter. One is the volume growth. Second is market coupling, how it evolved. And third is transaction charge. So on volume growth, IEX has been stellar. The last 2, 3 months, volume growth is 30% year on year, which is phenomenal. Although we think it'll moderate once monsoons recede, because IEX volume growth is also inversely proportional to power prices. So if power prices go up, IEX volume growth slows down. Secondly, more importantly, which is more topical, is the market coupling part. Uh, Outside in is difficult to predict. If you look at the regulatory order, which came a few months back, they will do a shadow pilot to see if coupling gives them benefits and it's operationally feasible, and then take a call on whether to do coupling or not. So we still think it's a 50-50 odd. It happens, although press articles the last couple of days have been highlighting it with high certainty. And if it happens, we think it'll only happen in the real-time market, not all products of IEX. It'll happen in the real-time market to begin with, and then they'll take a call forward from there. The third point in IEX is transaction charge. So the reason we have been negative on the stock is because we feel the transaction charge of IEX at some point might be under pressure. So today they charge 2 paisa to the buyer, 2 to the seller, which is 4 paisa put together. So almost a 1% transaction charge, which could come under pressure sometime in the future. So these three aspects are what matter. And so we remain negative on the stock from a medium to long-term perspective.
Okay, those three factors keeping you on the sidelines for IEX. But Sabyasachi, Nikhil is giving it a 50-50 probability of coupling going ahead or not. We have all seen those stakeholder comments that CRC had invited, or the Power Ministry had invited on this as well. And it was more towards the negative side. What probability would you ascribe to market coupling becoming a reality over the next 12 months?
I think I would go with him. I think more or less I'd be on the same line.
50-50 it is for you as well. But Nikhil, since we are talking on the subject, there is this slew of renewables IPO which are expected to come in, whether it is, of course, NTPC Renewables, or the fact that Waaree Energies has got the clearance as well. Acme had filed the papers. And then there was that slew of public divestment which was expected to happen, whether it was SJVN, ONGC, NLC, everyone was talking about, breaking up their green energy portion and listing it separately. Your initial thoughts on NTPC, because I think you're of the view that that's not the best way forward.
You're right. So there are two ways to look at it. One is a fundamental perspective, and the reason we have been, not in favor of that event is, right now, if you look at NTPC, the thermal business is generating all the cash. It's making a lot of profit for them, and the renewable business is where all the capex is happening. So it's a beautiful structure right now with the thermal plants capex cash flows fund the renewable capex and growth for them. So if you separate them out, that story sorts of breaks to some extent. So that is the fundamental part of it. But if you look at second part, which is the recent interest in renewable theme and plays in renewable theme, and the way the IPOs have done in the renewable space, uh, the valuation, there could be value unlocking which could happen with this renewable listing. So it's a two-sided story. Overall, NTPC, we are still positive. It's one of our top picks in our coverage. Yeah, so that's how I put it on that.
So there could have been a better way, still positive, of course, on NTPC. NTPC, but let's see what the renewables bring in. Sabyasachi, what's your take about this government's view of divesting stake in some of these renewables, whether it's SECI, whether it is ONGC, SJVN, NLC, and the likes? Do you think that is the right way forward, and do you see that becoming a reality over the next 12, 18 months? A lot of these companies getting carved out and listed separately?
See, I think, first of all, I would not like to speak about the valuations or, whether, private, listing is the right strategy or not, because that's not our mandate. Having said that, I would look at it from two perspectives. One is, of course, what is the government's motivation for, listing? One of the motivation for listing and divestment, of course, would be to meet its own, funding requirements, for their own budgetary purpose, because they have a certain target every year from the disinvestment perspective. So that way, the government has to take a call on as to whether they want to divest, or they just want to have additional funds for the various, renewable energy companies which are in the public sector. So we cannot really comment on that. The other aspect, of course, is that, as I said earlier, that we have based on, what CARE, expects about the total amount of renewable energy capacity addition and the storage which has to go along with it. As per our own internal analysis, over the next 8 years, we'll be requiring about 19 lakh crores of funds, of which, let's say, about 25% at least, or about 4.5 to 5 lakh will have to come from the equity. Obviously, many of the renewable companies do generate, free cash flow after debt servicing and all. And obviously, that is available for equity. But obviously, given the fact that the amount of capex is so huge, obviously, we will need additional equity funding. Now, as to whether equity funding will come from the IPOs or whether it will come from fresh equity from, outside the country, I mean, more private equity money coming in, that's something that, that's a call that individually the promoters of the various groups will have to take place. So that is not something I can comment on, but obviously I think the sector requires a lot of equity, and whether it, from the perspective of the rating agency, because we would like the renewable energy companies to maintain, comfortable leverage metrics as they go forward on the capex plan. So obviously, equity market may look at it from a different perspective, but as a credit rating agency, obviously we would want, from the rating, metrics perspective, leverage perspective, fresh equity to come in, whether it comes from, IPOs or whether it comes from, equity infusion from the existing promoters domestically or from PE investment from outside, that's a different matter.
Right. Sabyasachi, Nikhil, both of you, thank you so much for joining in. Got a good in-depth understanding of where exactly the sector is heading, and of course how investors and what investors should be really, reading into this entire piece.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.